Hello and welcome to Dr. Hwang's AI Stock Factory. Here's today's U.S. market closing update. Visual, Dr. Hwang's AI Stock Factory logo, then transition to chart graphics showing S&P 500, NASDAQ, Dow performance. Hashtag U.S. market close recap, 1-2 minute. The U.S. market closed with a mixed performance today, predominantly driven by strength in the technology sector. The S&P 500 advanced by 0.58%, closing at a new record high of 7,444.25, while the NASDAQ surged by a notable 1.2%, ending the session at 26,402.34. In contrast, the Dow Jones Industrial Average experienced a slight decline of 0.14%, settling at 49,693.2, indicating a rotation or specific pressures on its constituent components. Delving into sector performance, semiconductors, represented by the SOX index, led the charge with an impressive 2.6% gain. The broader technology sector, tracked by XLK, also performed strongly, rising 0.9%. Healthcare, with XLV, posted a respectable 0.6% increase. These leading sectors underscored a clear preference for growth-oriented and innovation-driven companies in today's session, contributing significantly to the S&P 500's record close. Conversely, several sectors lagged. Real estate, XLR, saw a decline of 0.8%, while financials, XLF, fell 1.1%. Utilities, XLU, also struggled, dropping 1.1%. This divergence suggests ongoing investor caution in interest rate-sensitive or more defensive areas of the market, even as broader indices reached new highs. The VIX, the market's volatility gauge, stood at 17.87, reflecting a relatively stable, yet not complacent, market environment. Today's primary market driver was unequivocally the robust performance within the technology and semiconductor segments, propelling the S&P 500 and NASDAQ to new territory. Hashtag global macro and hot topics, 1 minute, turning our attention to the global landscape, several key headlines warrant close observation. First, the ongoing Trump-Xi summit in Beijing remains a pivotal event. Reports from CNBC highlight discussions surrounding the Thucydides trap, indicating high-stakes negotiations aimed at defining future U.S.-China relations. Any significant developments, positive or negative, could have profound implications for global trade, supply chains, and specific sectors like semiconductors and multinational corporations. Investors should monitor for shifts in trade rhetoric or policy direction closely. Second, domestic economic sentiment continues to draw focus. CNBC also reported that Americans still feel negative about the economy, raising questions about consumer spending and the timing of a potential improvement in sentiment. This persistent pessimism, despite strong market performance, could signal underlying concerns about inflation or job security, potentially impacting consumer discretionary sectors in the medium term. Finally, we observed significant central bank action overseas today, with the Swiss National Bank cutting interest rates by a half point to 0.5%. This move marks a notable divergence from some other major central banks and suggests a proactive stance to combat economic slowdown or manage currency strength. Such actions from global central banks can influence capital flows and set expectations for future monetary policy decisions worldwide. Hashtag overall market sentiment, 30 seconds. Based on our algorithmic analysis, the market regime for today is categorized as yellow circle neutral. While we saw strong gains in specific areas like technology, other sectors experienced declines, reflecting a nuanced and somewhat cautious environment. This condition indicates a market requiring careful navigation, where selective opportunities exist but broad-based risk appetite remains constrained. Today's VIX reading also supports this balanced, rather than overly complacent, assessment. Hashtag noise cancellation briefing, 30 seconds. Today, we scanned over 500 stocks across the S&P 500 and NASDAQ, subjecting them to our multi-layer, proprietary filter system. This algorithmic analysis is designed to identify setups with optimal risk-reward characteristics. After rigorously evaluating all candidates against our strict entry criteria, we found that 0 stocks passed all filters. Consequently, we have no new top picks for today.
Top picks number 5 to number 1, 3-4 minute. This outcome, while uncommon, underscores the disciplined nature of Dr. Hwang's AI stock factory. Today, after scanning over 500 stocks through our multi-layer filter system, no stocks met our strict entry criteria. In this environment, patience is the strategy. Our algorithm is meticulously designed to protect capital first, prioritizing quality setups over merely having a pick for every session. When the market conditions present an elevated level of uncertainty, or when individual stock setups do not align with our predefined risk management and profit potential parameters, our system signals caution. It's a testament to our data-driven approach that we do not force trades or offer recommendations simply to fulfill a quota. The current market, characterized by mixed sector performance and ongoing global macro uncertainties, demands a highly selective approach. While indices may reach new highs, beneath the surface, the conditions for high probability, low-risk entries might not be present across a broad range of stocks. This is where the power of algorithmic discipline truly shines. It removes human emotion from the decision-making process and adheres strictly to objective criteria. We believe that preserving capital during these periods is paramount. Waiting for clearer setups, where the confluence of technical, fundamental, and quantitative factors aligns, often leads to more robust and higher conviction opportunities. This is reference data only. Protect your capital first. We will resume providing top picks when the market presents cleaner, more compelling setups that meet our stringent algorithmic requirements. Our commitment is to deliver actionable, high-quality insights, and sometimes, the most profitable insight is to simply wait.
Today's variables/events, 30 seconds. Looking ahead, several key events and variables warrant attention for the remainder of the week. Tomorrow, May 15th, marks the U.S. options expiry, which can introduce increased volatility and potential price swings in underlying assets as positions are closed or rolled over. This is a significant market event, and traders should be aware of its potential impact across the broader market. Additionally, the Bank of England's interest rate decision on Thursday, although slightly delayed due to VE Day observations, will be closely watched for its implications on global monetary policy and currency markets. We continue to monitor geopolitical developments, particularly the U.S.-China discussions, and evolving consumer sentiment data as critical risks to navigate. Make your own final decision based on your research. Past data does not guarantee future returns. Closing line. Based on algorithmic analysis, Dr. Hwang's AI stock factory provides these daily insights. For the fastest access to profitable insights, subscribe and hit the notification bell.